This is by far the best way to identify and trade liquidity setups when trading the markets. Now, this does not matter whether you trade stocks, forex, commodities. It does not matter. I have seen this work in every single market. It is something as a supply and demand trader for the past 4 years, 5 years. It's something I never really added in until the last year, I would say, is these resistant traps, I like to call them, or liquidity areas, whatever you like to call them. The way I view this is support and resistance zones or areas. I don't always just do it like in a line. It's always like more of a rectangle box. But the main kind of the rough idea of what we are seeing here is very simple. We have a supply zone above, and right before our supply zone, we have a clear area of resistance with multiple touches. Now, multiple touches is definitely not required. I want to make that very clear. For example, let's say we had a supply zone up here, the exact same situation, and we had price push up, almost hit the supply and pull back in. This is a liquidity area. Now, this is now a liquidity supply zone, or whatever you want to call it. I don't really know exactly what to call it. Just a supply zone with a clear area of resistance, which will act as liquidity before the supply zone. So we do not need multiple touches and then we can draw it. It can just be, and I've seen it work out, where it's just one clear area of resistance. The retail traders and majority of the traders trading support and resistance are retail traders, guys. Sorry to break it to you. They are shorting at this resistance area, and their stop losses are right here, right around here, right into our supply zone. So the same thing goes for demand, where we have our demand zone down here, and price pushes down, bases out right before our demand zone, and then traders are buying this area of support, and their stop losses, which are sell orders, right? When you're buying, you are selling back with your stop loss. Their stop loss orders are acting as liquidity for our buy zone and our demand zone, and we take the trade just like that. I will say as well, like I said, it doesn't need to be multiple touches, but I do prefer as many touches as possible, right? With this trade on Euro New Zealand on the 4-hour time frame, we had the initial reaction off, or the initial high formed, came in for a second test. I was liking it there, and even like right here, I was calling out this trade to the members and saying, look guys, it is a pretty good zone. The zone itself we're going to talk about in a minute, but it was a pretty good zone. The fact that we came up and hit it multiple times again gave me even more confidence in this setup on the Euro New Zealand, and I simply couldn't ignore it. It's actually not one that I trade at all, really, to be honest, but I do the Sunday live stream forecast for all the members, and this is one of the markets that we cover, and I saw it, and it just, I don't know, to me, it just stood out so much, especially since, like I said, we got 4 touches. That's huge, and look at almost no drawdown with that setup. And just for clarification, this setup was called out ahead of time in that live stream forecast. Here's a clip of me doing that right now. The Euro New Zealand, technically the weekly and the daily are up, so shorting is counter trend, but honestly this whole chart's going to revolve around this 4-hour time frame here. We are currently ranging, but we have a supply above with a clear area of resistance right before it. So if you're bearish, that is our supply zone short at 1.849. However, I would not be looking for like a 3-to-1, 4-to-1, 5-to-1 move. You could maybe look for a 3-to-1 max, but it is counter trend. So we either need to wait for the supply zone to be hit to look for shorts, or we need to wait for it to be removed, creating new demand, and then we can look for long off of that. If you want to trade alongside myself and the community, join the Diamond membership for exclusive access to our daily market breakdown videos and catch trades like these. Plus, dive deep with our full-length forecast covering 26 plus markets, our interactive Sunday Zoom sessions, and personal homework to sharpen your strategy. And you'll also join our private Discord group for direct access to me and unlock a complete library of A to Z video lessons to master supply and demand trading. Don't miss out. Let's level up your trading. Links in the description down below. So we talked about the resistance area right before our supply zone, but now let's talk about the supply zone. So we had a very, very good looking upward trend, I would say, on the 4-hour time frame. And that trend was broken. It wasn't really broken by this supply, but this is kind of the origin of this entire move down. So in theory, there actually was another sell setup right here technically, because that zone removed this area of demand, so that would have been the setup as well. But honestly, I would not have taken that trading setup because of the fact that the supply zone above it was better in my opinion. So it wouldn't really have been a setup, especially with the resistance area created as well. But anyways, so if you look, it's a huge change of trend here on the 4-hour time frame. Now, this was the origin of the move. I like the 4 candle basings. I don't love this wick. So there are some things I'm not a huge fan of this zone for, but honestly, it's a good it's actually only 3 candle basing before that initial strong move down. Now, I'm not a fan when price bases out right after that strong move. However, the combination of the fact that this move down was very strong, followed by an overall very good move down, right? Because we do look at that. We look at individual candle moves and then also just overall moves. Both of those moves were pretty good in my opinion. So it made me feel comfortable pointing out this zone, especially with this resistance area. I want to be very clear. I usually only point out zones that remove opposing zones. So for example, let's say we have demand here. The demand pushes up, it removes the supply. I'm now mapping out the demand that removed the supply and everything. So I'm doing kind of like a chain analysis. So I usually only point out zones that remove opposing zones. In this instance, this didn't really remove anything. The trend line was removed right here. This demand zone was removed by, like I showed you guys earlier, that supply zone. So I was kind of actually breaking my own rules, but again, we created this resistance area trap right before the zone. So it added that confluence that I needed, especially considering it didn't really remove anything. The fact that we had this, honestly, in my opinion, with trading, you have to definitely stick to your plan 100%. There are going to be things, though, where you're like, oh boy, I've seen this work out many times. And when we got that 4th touch of that resistance and fell, I'm like, oh my god, this is such a good setup. Especially since the resistance trap is there. I can ignore the fact that it didn't remove anything. It's still the origin of the move. The move away is good. So there are times where you don't really need a zone to remove something, because I always tell people as well, let's say you're looking for a confirmation trade. This is our higher time frame demand zone right here. You're waiting for this demand zone to be hit. Then we're on our entry time frame, and then we are waiting for like supply zones to be taken out, right? And then we map out the demand zone that takes it. That is our confirmation model right there. We're waiting for opposing zones to be removed. In this instance, like I said, I kind of broke my own rules on that, but honestly, I mean, it worked out great. It worked out fantastic. But another thing here as well, we didn't get so we got a 3-to-1 off this trade. So if you just look here, that's how the setup looked. Something like this. Price has gone well over 6-to-1. 3-to-1 in my opinion was fine here, and the reason why is because when you go to a weekly time frame, so we're going to do top-down analysis. Remember, this trade happened on a 4-hour time frame. This is my 4-chart layout. Not only did we have a daily upward trend, right? So we are trading against this entire upward trend. Sure, looking at just this sequence of time here, it can look pretty bearish, and it doesn't mean that you can't get in long, right? But that can look super bearish. But overall, right, the move is up, especially on the weekly chart as well. And not only that, a weekly demand zone pretty much came in control. So it was a pretty high risk setup in my opinion. There's not a right or wrong though. It doesn't mean you cannot take counter trend trading setups. But what I tell members in situations like this, where we have a higher time frame trend to the upside with demand and control, the daily trends up as well. It's everything is going against you in the higher time frames. That's okay. We just need to take profit earlier. And this was actually a great time too, where you could have moved your stop loss to break even pretty quick. And just a little bit of a lesson on trade management here. That's part of it, right? If I'm trading with the trend, so if this was a with the trend trade, if my weekly chart looked like this, the daily chart looked like this, and maybe we were pulling into a weekly supply, I would probably still be in this trade a little bit, not 100% of my position. I want to make that very clear. I'm not going to sit here and play pretend and be like, oh yeah, I'd still be in this trade. I'm holding. I definitely would have taken some profit off for now, especially at 5-to-1. But it might have been a time where, again, if it was with the trend, it might have been a time where I took my stop loss and maybe I just bumped it up with price. and just, you know, over like little areas of supply and demand, maybe even on lower time frames. That is an option when you're trading with the trend. But again, this was not a counter trend setup. It was worth it, in my opinion, based off of these factors and what I was seeing. But looking for a 5-to-1, even a 3-to-1 can be a little greedy in these situations, to be quite honest. This was, I don't remember exactly when I bumped my stop to break even, but usually I will remember. But when price wicks out of the zone so quick and shoots down, it's you know, it's very easy to forget what happened. I pretty much saw, you know, the move was good, and, you know, stop loss, definitely break even as soon as I could there, in my opinion. So that was the trade on the Euro New Zealand. Again, be careful taking these setups. You don't want to just blindly take every single supply zone setup with a resistance before. You want to make sure we are getting nice changes of trends. Demand zones are being removed. Nice moves down, because you will see this setup a lot, and it's not always going to work, right? So anyways, hopefully this video helped. If you guys have any questions on this topic, if you want to see more videos on this, please let me know in the comments down below. Again, any questions at all, don't hesitate to ask, and make sure to subscribe and like the video if it helped. And my weekly Forex forecasts are recorded every Saturday at 3:30 a.m. Eastern Standard Time if you want to get free forecasts for the market. If you want more, check out the Diamond membership. Anyways, guys, I will see you in the next video.